Good morning, everyone, and thank you. I'm Vaishnavi Vaiti on behalf of AKMIL Strategic Advisors. I welcome you all to the Q3 FY26 earnings conference call of Fabtech Technologies Limited. Today, we are joined by Mr. Ashwani Singh, Chief Executive Officer. With this, now I would like to hand over this call to Ashwani, sir, to introduce further. Over to you, sir. Thank you.
Thank you, Vaishnavi. Good morning all. Thank you for joining us. Let me begin with a quick introduction of the leadership team present today. Today, we do have with us Mr. Asif Khan, our founder and promoter, Mr. Aman Anavkar, our Chief Growth Officer, and Mr. Karan, who leads our investor relations and strategic analytics. Our transition to the public market happened relatively quickly, and we did not have the benefit of extensive roadshows or the prolonged pre-listing engagement. Despite that, we received a very healthy response, and we are grateful for the confidence shown in us. At the same time, we recognize that our business model and the structural platform we are building are not yet fully understood by all. We are not a conventional contractor. We are building a design-led, globally positioned life science infrastructure platform focused on a long-term structural growth. We are also concisely grooming the next generation of leadership, empowering young talent to help shape not just Fabtech future, but the evaluation of the market we operate in. In many emerging geographies, we are contributing to the very foundation of the pharmaceutical manufacturing capacity. We are building for the decade ahead, not the quarter. With that, I invite our Chief Growth Officer, Mr. Aman Anavkar, to take you through the company in detail. Over to you, Aman.
Good morning, gentlemen, ladies. I hope you're keeping healthy and well. I'm Aman Anavkar. I would firstly like to start with a brief presentation of the Fabtech Technologies Limited offering that we have. Milan, can you confirm if my screen is visible?
No, sir.
Just a second. Yeah. Now is it visible?
Yes.
Perfect. So to start off, Fabtech Technologies Limited operates in the pharmaceutical, healthcare, and biotech industries and is the only turnkey life sciences platform with in-house process, air, and water manufacturing. Process, air, and water are the critical lifelines for biopharmaceutical facility, and this enables us to take single accountability, single solution responsibility, and reduces the entire coordination risk of a pharmaceutical turnkey project. We are a design and build entity that has been operating over the last 3 decades, that is 30 years, in pharmaceutical emerging markets. Pharmaceutical emerging markets like the Middle East, Africa, Persian Gulf, GCC, where medicinal independence is becoming a long-term goal and a priority. With the in-house capabilities that Fabtech Technologies Limited has, the speed to market or the go-to-market timelines are reduced, and the responsibility that we can take ensures that we are the reliable partner that is chosen by greenfield and brownfield entities. Our focus is ensuring regulatory confidence, compliant facilities across the pharmaceutical emerging markets, and standing by our motto, which is making medicines affordable and available globally. Through the last 3 decades, we have built numerous facilities with WHO PQ approvals, EU GMP, US FDA, CGMP, and local regulatory approvals across the pharmaceutical emerging markets. Our attention to detail in the pharma, healthcare, and biotech industries focused on GMP compliance, energy efficiency, operational efficiency, and contamination-controlled environments has allowed us to build several references across 62 countries. We have our regional presence across Algeria, Nigeria, Egypt, Jordan, Saudi Arabia, UAE, India being our roots, but we are a transnational company having the life sciences platform capable of executing projects across the pharma emerging markets. I reiterate this. MENA, GCC, economical regions like Africa. We are an extremely asset-light, lean integrated model which combines GMP expertise, which we hold in-house, with over 180 engineers, technicians, draftsmen, pharmacists, and experts on our team. We have an order book which you can see as of 3rd November 2025 with the capabilities across HVAC, process, automation, and clean rooms. And we're trusted by leading pharma emerging companies and existing pharma giants. The service offering that we provide when we say design and build, as you can see my screen, starts at advisory consulting, where we guide our clients towards disease profiling, market mapping, market planning, and financial feasibilities to ensure that the products that are selected by our client are feasible for their markets. We are also in the business of building profitable businesses for our client, so we have to be very selective with the kind of approach that we must have for our business. From the disease profiling step, then comes the design, conceptual engineering, basic and detailed engineering, and then the entire project management cycle, which includes the vendor selection, procurement, execution, commissioning, validation, technology transfer, and the after-sale project support, sales, service, and maintenance. This is the entire service offering of Fabtech Technologies Limited that has allowed us the references that we have built. Now, what you see on the screen is the structure of the Fabtech Technologies Limited group, where we have our operations and our acquired companies present here. You have the turnkey engineering services, which is process, air, and water, which has Fable Technologies LLP, focused on critical containment solutions, which Fabtech owns 49% of. We have Fabtech Technologies LLC, which is a UAE subsidiary through which we acquired 2 years back FTS Cleanrooms Systems LLC. Markmaker, which focuses on critical granulation OSD process solutions, which we acquire 33% of in 2024. And TSA Process Equipments Private Limited, which focuses on critical water solutions, which we will be exiting in this financial year. I would like to now focus on, I'm going to stop my screen sharing, and I would like to speak. Let me first reiterate that the given nature of our design and build and shipment-based billing, especially with a growing international mix, quarterly numbers can fluctuate due to timing, while the annual guidance remains the right lens to evaluate performance. Coming to Q3, the softness is purely a timing issue. A meaningful part of Q3 execution was completed during the quarter, but not shipped within the same period. In export-oriented design-build projects, revenue is recognized only upon shipment, not upon milestone and project progress certification. Accordingly, shipments and inspections for certain projects moved early into Q4. Activity happened on the ground, but revenue slipped into Q4. Additionally, Q3 absorbed the front-loaded costs with back-ended revenue. Certain expenses such as engineering, mobilization, exhibitions, and international business development are incurred upfront, while the corresponding revenues are recognized with a lag. As a result, Q3 reflects the cost and Q4 should reflect the payoff. It is important to note that order inflow has not slowed. The order book remains strong, pipeline visibility is healthy, and there have been no cancellations or pricing pressures. This clearly indicates that the Q3 impact is timing related, not demand related. Looking ahead, deferred revenues are expected to be recognized in Q4 and execution momentum remains intact. Simply put, execution continues, demand remains strong, and the numbers will follow with timing. We operate in geographies that are on a long journey towards medicinal sovereignty, medicinal independence. Many emerging markets want to build their own pharmaceutical capabilities rather than depending on imports. This is where we come in. We are in the business of building life sciences infrastructure that make medicines possible. We are India's global design build platform for advanced life sciences infrastructure. We are not building for the quarter, we are building for the curve, and in many cases, helping that curve. Our focus is on creating the healthcare backbone for countries that want sovereign pharma capabilities. We have also launched our Twitter to consistently share what we are building and where we are building it so that our business model and depth of work are clearly understood. I thank you for this opportunity and we are open to questions.
Thank you, Aman sir. Investors, the floor is now open for Q&A session. You can raise your hands or drop your questions in the chat. Thank you.
The first question by Hiral Desai, and I hope I'm audible. Can you elaborate a bit more on what disease profiling means? Yes. Disease profiling is the process of identifying which diseases are more prevalent or growing in a certain country or region. Based on this identification of the diseases, the client is able to make a collective decision what product he would like to produce.
And I would like to add to that, disease profiling also kind of preempts the disease pattern that would going forward emerge in a particular geography. Now, this helps us in advising the client in his selecting the right product portfolio based on which the facility should come up. And as Ashwin and Aman have mentioned, we are building profitable businesses. We are helping our clients in those geographies build profitable businesses. So disease profiling begins marks the crux of the business.
Okay. Next question, please.
Hiral, we are only allowing typed questions, or we can also
have the audio on. I think Maitri is
Yes, Maitri,
trying
you
to
can
ask the
go
question.
ahead and ask the question.
Yeah, hello, am I audible?
Yes.
Yeah, good morning. Firstly, if you could quantify the revenue that was deferred to Q4 that we were supposed to recognize in Q3, if that's possible.
Sure, Mehdi, I'll take that question. So around 20.3 crores of stock of material was lying at our port, which got delayed and will be billed in Q4.
And any order book number you could give, which is like related to December figure? Because in the pre-presentation we mentioned the November order book number. So
So as of Jan 31st, our outstanding order book is 926 crores.
926
26.
crores. Okay. And this is as of Jan ending.
Right. End of Jan, 31st Jan,
Okay.
you can
And
say.
any bids or orders that we have in pipeline that we are expecting to see an inflow in the next 2 months, February, March?
Yes, there is a very healthy, Karan, I'll take it. There is a very healthy hot lead bank that we have close to roughly around
$455 million.
455 million US. And you will learn shortly of some very beautiful conversions that are going to happen in Africa and the Middle East.
That is great. And this 926 crores, if you could give me the split between the export and the domestic, if that's possible.
We
Maitri,
have,
we only do it. Sorry, go ahead.
Karan, if Shinsi has, then we'll allow it, yeah? No, very, very less of domestic numbers, Maitri, here. We are
Okay.
largely export focused. The international
Mhm.
market, the medicinal, the farm emerging market offers such a big potential that we rather focus on the geographies that are perceived to be a no-go areas for many. And hence,
Mhm.
when we have ring-fenced the market in the last so many years, we would want to really reap in the benefits in the times to come.
That is great. And each of these orders, if you could tell me the lead time, how long it takes us to complete the order and kind of recognize the revenue.
Maitri, it seems you're representing the entire investor community, but I'll take it. I think you're covering most of
Yeah.
the questions. You're covering most of the questions. So
Yeah.
generally, up till now, we used to be having 9 months to 18 months for delivering an order. But going forward, we are speeding the process. Even the market is demanding uh, uh, quick deliveries. They're in a rush to achieve medicinal independence. Of course, it's a 15-year-old net pipe that we see. Uh,
Mhm.
but you will see a quick realization happening going forward.
That is great. Yeah, I think that is it from my side. Thank you so much.
Thanks, Maitri.
Thank you. Next question is from Mr.
Ani-
Ankit Madhwani.
Yes,
Mr. Ankit, you can
Aniket.
go ahead.
Yeah, hello, am I audible?
Yes.
Yes, Aniket.
Yeah, sir. So I might have missed the earlier clarification on the numbers. So if you could just summarize in short, what was the major reason in this dip in top line and the bottom line in Q3?
Aniket, may I request you to go through the transcript? The important thing, crux is
Yeah,
work
you can
happened.
just summarize in few
Yes,
words.
yes. Work happened in quarter 3, revenue slipping to quarter 4, around 22 crores of material lying at the port. We are not a quarter-to-quarter story. We are a yearly guidance and design and build made. This is the trade that you will see. But the yearly guidance remains intact.
Okay, and can I have the number of the guidance? If you...
Yes, so as we had specified, will be between 380 to 400 crores and between 39 to 41 crores of PAT.
Okay, done. Yeah, thank you.
There is a question in the chat box. What is the average ticket size of a typical order? What would be the bidding pipeline and what would be our win rate? Can we also talk about competition? Usually we refrain from talking about competition. We prefer not talking about European companies and just differing from the topic, but the average ticket size of typical orders ranges between $1.5 million to about $5 million on a lower ticket size.
Yes, and going forward, these ticket sizes are showing a marked increase where the average ticket size at this moment is around $7 million.
Yeah.
We have a huge hot lead order bank where an average ticket size is between $7 to $10 million. Earlier, which used to be, as Aman said, $1.5 to $3 million, $5 million
Right.
is now increasing, because as you saw, and many of you might have missed the presentation which Aman gave, we are a platform, a global life science design and build, or an infrastructure platform. And what it means, what we mean by platform and how we are different from an EPC is, a platform has the critical capabilities of process, air, and water within the group, where we have invested in companies, or we have bred or developed our homegrown companies to do air and process and containment solutions. So there would not be a company like us which has a very strong design platform, in-house design of oral solids to high-tech vaccines or biosimilars or onco. We have a very beautiful platform of manufacturing critical components that go in the project, that is process, oral or injectable, air, which is needed to cover the process, and water, which is needed to feed the process. This all is done in-house. That's what we mean by platform. And this platform is enabling us to pitch for bigger projects. Plus, add to that our project management team in on the ground in regions which matter the most, speaking the same language as the customers. Our win rate, 10 to 12% thus far. In the last three months, it has increased to 15%. And we have raised money for acquiring a European entity, which will increase our conversion rate to 20 to 25%.
Next question, please. Investors, the floor is open for Q&A session. You can raise your hands or drop your questions in the chat box. Thank you. Yes, Mr. Girish, you can go ahead and ask the question.
Hello, good morning. Am I audible?
Yes, Girish.
Yes. Since you're a biopharma platform provider, I wanted to, since you said vaccines and biosimilars and all, so we also make the facility for pyrogen-free water as well, like, those kind of facilities. Like, it's a bit technical what I'm asking. Yes. And we also maintain it, or we just build it and provide it to their own engineering people?
Not really. We don't maintain it as of now, and we don't see ourselves maintaining till at least mid of next year. After that, we'll see how our plans fructify. But largely what we're doing is we're making our projects that we supply to these critical geographies self-maintainable by providing them a project manager which takes over as maintenance manager. So that's one. And add to that.
Girish, to address specifically, when we execute an end-to-end design and build project, the scope of work also includes knowledge transfer, trainings of the operators as well. So we have to ensure that the in-house engineering and maintenance teams are built on the client side, so that the dependence on independent companies is taken away. But at the same time, we have started, as mentioned in the previous earning call, exploring the service platform, the annual maintenance contracts as well. So one of the first IV solutions, the paraben-free water WFI, which we call it, plant that we're building in Djibouti also includes an AMC component. Annual maintenance contract. AMC is AM, yeah.
Yeah. Understood. Okay, got it. My second query was regarding the order book, which now stands at roughly around 920 plus crores. So that should we understand it that it will all be executed roughly in the next 18 months? Because you said 9 to 18 months is your project duration.
That's right.
Yes.
That's right.
Okay. And currently, we only are looking at the pharma sector, like unlike your India operations, where you're looking at food and other market segments like electronics and all that. We are not. We are only focusing right now on the pharma sector here.
Currently, yes, the pharma itself, the life science itself is offering an unprecedented opportunity, a fantastic
Yes.
opportunity. But
Hmm.
we have always also mentioned that we are from now preparing for the food security issue that is going to happen in these geographies that we are operating in, number one. Number two, our India business is largely clean rooms and the upstream and downstream clean rooms, whereas
Okay.
we are focusing on turnkey. Now that's the
Understood.
difference. This is a
There is a,
turnkey
yeah.
company which is packaging, process, infrastructure. Now that
Yeah.
is only the clean room infrastructure. Number three, there are opportunities which are unfolding in this part of the world also, namely semicons, electronics, and data centers. Now, we will really look at that when it really comes to that level.
Okay.
We, of course, will be in preparation with both our companies, and we will take an app strategy to address these markets when the time comes. Till that time, we do not want to lose focus from the tremendous opportunity that lies ahead of us.
Okay. Fine. That's all from my side. Thank you very much. Thank you. Good day.
There are two questions in the chat box. One is what kind of margins would we be seeing going forward? Also, the margin profile across segments and geographic regions. Also, any ongoing acquisitions going forward, and if any, what kind of impact would they have?
Yes, so the margins, Neil, would remain between 9 to 11% PAT. We have the flexibility to increase the margins if we rationalize our marketing and business development expense, which stands to a staggering 8.5 crores. All right, every year we have been spending around 8.5 to 9 crores in our promotion and development only. Now, largely we are in the right geographies, ring fence the market, present in those countries, in those soils. So we have the flexibility to increase it, number one. Number two, margin across profile across segments. So that averages out to the same. Africa is eco market. It's a sensitive market, but we are deep drilling now in Africa, and you will see huge traction happening in that continent. And to address the eco needs of Africa, we are taking certain backhanded steps, which you will see in times to come, which I'm not. I can't share it because this is sensitive information, but you will see a very beautiful geographical advantage that we'll be taking, leveraging different supply chain geographies, leveraging our presence in the UAE and in Saudi. We are becoming domestic here. So you will see very exciting steps that we are going to take forward till thus far not taken by any Indian company, number one. Number two, acquisitions, yes, there are plans and we have a very decent
Yes.
acquisition engine, that is the war chest for acquisitions. And Europe offers a very beautiful opportunity. We are closing in on a couple of them. Here in the UAE and in Saudi, we are also closing in on some acquisition opportunities to get us those
Strengthening the local image and
presence.
operations.
And what kind of impact would they have? You will see the impact what they have. It will
Positive.
be a very beautiful, positive impact, because once we are local, we are preferred. And all of these countries want to become local, and we have a very head start, very decently positioned in capturing the market which is offering. What is that?
Vikas Gupta has asked a question, was there also set off revenue deferred in Q2 to Q3, which can offset the 20 CR margin now expected in Q4, or as of now, it is a one-time guaranteed margin?
So listen, because this point of quarter fluctuation will keep happening. If you saw quarter one was subdued, quarter two, where the spillover from quarter one happened in quarter two. and some of the Q3 also we pulled to Q2. Okay. Similarly, this is all as you will not, unfortunately, we do not have a precedence of what we do. Unfortunately, we don't have anybody else who have done this before us. So to learn from their experiences, their mistakes, their lapses. Here we make mistakes, we will learn, but we have enough buffer, enough freedom to if not the right word, fail, but to experiment. And as the markets go, and there are some markets which are all some clients which are also surprised by our speed. So we have the material ready, they are not ready with their buildings. So we take cognizance of the relationship that we build with them, and we really hold the shipment. Otherwise, the LC says ship it, we can ship it, dump it there, we'll recognize our revenue, but then it will not be a very long-term relation building. We sometimes accommodate our clients. So, this is what you will keep seeing in at least the next 2 years. The quarter fluctuation, I feel, could happen, but largely we are on track on yearly guidance.
Yes.
Breakup of the current order book by end user industries, all pharmaceutical, all life sciences. So honestly, there are no breakup as such, but yes, we thought the pharmaceutical emergence in the medicinal independence that these countries are planning would only give us the generics. But we are pretty surprised by the GCC giving us cell and gene therapy projects, by giving us high-tech medicine projects, oncology projects. We in Djibouti, we finalized the animal
solution secondary packing
animal health.
OSD. That is in Botswana, vaccines.
Animal health. Now, animal health is अब तक तो human को इलाज कर रहे थे. अभी animal health also is becoming
a big industry
in Africa, which we thought will happen much later, but it's happening now, and that has opened a very different avenue for us.
Next
There's a
question, please.
question by Aniket Madhwani. Could you please provide a breakup of the current order book?
That's what I mentioned. That's what I addressed. We thought our business was really not understood, and we were expecting a lot of questions this year.
There's a nice question by Dinesh Agarwal. Can we say Q4 will have a bumper profit exceeding 30 crores?
It has happened. It has happened earlier with us. So
no.
It has happened earlier, but here if we see, we have to achieve 20 to 24 crores to reach our mark, which is pretty much possible.
We're on the right track. Yeah. Maitri has given a list of questions. Number one, how are the receivable days in the Africa region? And if you could mention what clients are we working for? Are these local players or MNCs? I'll take that. The clients that we're working with are both MNCs and greenfield investors in the Africa region. We only work on confirmed LC-backed payments. So the timelines of the order, like we mentioned, 9 months to 18 months. There is no retention over 6 months from installation or handing over of the project, which is also backed by LC. Receivable days.
So receivable days, as we have been saying, we are a project company, but we work on LC-backed projects, so it is shipment based. Now, if we change our methodology of revenue recognition from shipment based, Karan, correct me if I'm wrong.
Yes.
Shipment based to project completion method or project progress method, you will see a substantial jump. Now, that is some call we got to take, but largely it's all LC backed, and I would correct 6 months से 1 year का time frame आप retention का ले सकते हो.
Correct.
And that's about it. Any timelines when the acquisition will be done?
First quarter.
We are very diligent when it comes to acquiring companies. We have very right priced companies that we are discussing with. In our rush and bid to expedite the process, we don't want to compromise on acquisitions. When we were getting into the IPO, our investors were encouraging, or pre-IPO investors were encouraging कि आप ले लो company को कोई भी भाव में ले लो अच्छा होगा and all the stuff. But we remain true to what we are building, and we know that success in acquisitions can happen if it is rightly priced. And we have very beautiful track record of investing in companies and turning them around and really making them add value to us. And we do not want to spoil that record. So you will see acquisitions happening safely in the next 6 months. We could even surprise you if it happens before March 31st, but likely nahi hoga. It could spill to next, right?
Yeah. And just to address the question right before that, which countries are we targeting in Europe? To reiterate, Maitri, the reason for the acquisition in Europe is to strengthen our conversion rates and the positioning in the pharmaceutical emerging markets where these European companies are expanding to. Because as we all know, the region of Europe in terms of growth and expansion is a bit saturated. So there will be references that will flow from the European side, but primarily we are focused to strengthen our sales, conversions, and growth in the same pharmaceutical emerging markets and ring fence it for Fabtech Technologies Limited. And question 3, FY27, what sort of growth are we looking at?
What can we say, Ashwin? We are growing at 30 to 40%.
30 is the target, the year-on-year growth. 30% we are looking at.
Yes.
Our revenue growth.
Okay. Investors, do we have any more questions?
There's a question by Aniket Madhvani to clarify, do we primarily execute only turnkey projects? And within that, what is the split between in-house execution and third-party execution? First question, we do not execute only turnkey projects, but at the same time, majority are greenfield turnkey projects that we do execute. But there are also instances where brownfield expansions by existing manufacturers are taking place. And those projects also do come to us, where there's an expansion of a machine or a clean room entirely, which we call as a brownfield turnkey operation. Many times also, when a client is diversifying, he is an existing manufacturer who is diversifying into a new product range, which can act as a brownfield expansion or a greenfield project acting as us, for us. And within that, the split between in-house execution and third-party execution.
No, we are
entirely in-house execution.
100% in-house execution.
I would like to, I think, rephrase this. Entirely in-house execution is present in all the projects that we do. At the same time, in-house manufactured products supplied to a plant is 30%, and the rest is from other reputable companies. So we're a very lean organization, I must say again, right?
So yes,
Vikas Gupta.
Because the stock has crashed, leading to the loss of shareholder trust. Honestly speaking, we were not very communicative, and we have realized that people, because as Ashwin mentioned, we are the IPO happened in we transitioned into IPO very quickly. There were hardly any roadshows. So like we did for our domestic company, Fabtech Clean Rooms, we never really had the opportunity to do roadshows to explain to shareholders and the market what our business is. The market has not seen anybody, and I don't think so the market has seen anybody like us thus far. And what we are building is, again, not for this quarter, next quarter, over the next year, but there is a very beautiful drug, food security, life science story emerging. We are working on it, not really getting perturbed by what has happened, because that's a culmination of many aspects, internal, external, everything put together. And I would say there are many beautiful companies which have become blue chips now. At one point of time, they were not understood well. It's not really bothering us. We know that we are true to the cause. We are a company which has less of frills and more of substance, and you will see that going forward. And whatever it is, you'll always find us now on very communicative, like we had done in Fabtech Clean Rooms. We are very communicative. We will be here also. So our Twitter is there in order for us to keep sharing whatever is happening with the company. And what's expected from now based on yearly guidance? Nahi pata. I don't want to speculate on that. I can always say we will do what we must do, and whatever happens in the stock market will be the function of how we perform. We expect your order wins to become in. Absolutely, I think this is something.
Repeat the question loudly. Dinesh has said, Dinesh Agarwal, we expect your order wins to be communicated to shareholders via stock exchanges regularly so that we can retain confidence in company. You're right. Absolutely right. That's all I'd like to say. And that is what we've learned. And we're going to exercise now and educate our partners, investors, shareholders about what it is that we're doing, what it is that we're succeeding, and what steps are we taking to secure our own business as well, right? And grow. There is a question by Dhruv.
Yes, Mr. Dhruv, you can go ahead and ask the question.
Thank you, sir, for taking my question. Just I'd like to mention that I recently visited certain pharma plants in Dubai and Sharjah that were executed by Fabtech, and the quality of work and engineering execution was excellent. Like it gave strong confidence in the company's technical strength, especially in the GCC region. So, but my question was on the data centers. Like this is a key global theme. Like, could you share how Fabtech is positioning itself in this segment, like the markets you're targeting, and a broad sense of the opportunity size or order flow we can expect over the next few years?
Well, as I mentioned, Dhruv, yes, another way not to succeed would be to run in all directions, number one. When we have a very, very potent market, the farm emerging market is Africa, Middle East, Persian Gulf, Maghrebian countries, MENA region. When you have such an opportunity here, when you can create a life science infrastructure giant, making medicine affordability and availability possible, uh, we would want to take our own time in preparing for the opportunities other than pharma preparing before taking a jump. A sure shot, as I mentioned, and I keep on mentioning, uh, running in all directions also will wear us thin. Number one. Number two, but it's not that we're turning a Nelson's eye to what's happening. As I said, you will see when it comes to that, we are prepared to take infrastructure projects at our beck and call. Whether we want to do it, that's a matter which we would want to discuss within ourselves and take a call. Having said that, we have in our ecosystem capabilities to take data center projects. And that, if it happens, it would be it would be seen. And thank you, Dhruv. And I would really invite every single meaningful, significant investor to come visit us and see what we are doing in order to understand what capabilities we have. In fact, you will see a lot of beautiful things happening going forward where we owning the process, air and water domain, and going forward through means we are controlling, we will be controlling the product IPs also, which will be making us compelling proposition for our clients to work with us. So medicinal independence is a multi-billion-dollar opportunity. If data center is a multi-billion-dollar opportunity, medicinal independence that these geographies are aiming is also a multi-billion-dollar opportunity, which nobody, very few people are positioned to take advantage of.
In summary, to all, right, what AK rightly mentioned, the priorities are life sciences projects and growing in this direction, but we're not shying away from the new industries like data centers that are available to us because our ecosystem holds the capacity and capability to execute these as well. There is a question by Neil. You have a 900 crore order book. Could you give us a rough breakdown on the timeline that we can expect the execution by? Roughly Q1 FY28, as you said, delivery timelines could get faster, so early realization would be possible, right?
Near 900 crore order position, Ashwin.
See, so, Neil, now you have to understand because we should have a very sustained growth year on year. And right now, our conversion ratios and what we are targeting for, order booking, we must have approximately double of our revenue targets, the growth target and all. Looking at 900 crore, yes, this is right that the major portion will be covered in next financial year. And approximately, you can say that 30 to 40% will pass on to the Q1 or Q2 FY28. And that is how we sustain in the market. During this process, definitely our team, what we are talking about, the conversion ratio of the order, which we are now targeting to increase approximately 15%. The order position by FY27 by end, I think that should reflect our position in the market.
And you are very safe to assume that we expect the execution roughly by Q1 FY28. Yes. And whatever steps that we are taking, owning the process, the IPs, and including the increase in ticket sizes. And there are steps that we are taking in order to expedite the civil construction by the clients also, because that is something which impacts sometimes, most of the times, us. So those are the concrete steps that we are taking. Number one, to improve our conversion rate. Number two, to increase our ticket size by not just offering what we are doing, but the process and the internal infrastructure, but also taking the external infrastructure in terms of PEB going forward. And there is another green energy option which is opening, where we have tied up with KP Greens for the solar. And that's also a proposition which is now being offered, and steps in those in that way will also are also being taken.
Okay. Next question, please.
Are we there?
Yeah.
Yeah.
Investors, the floor is still open for question and answer session. If you have any questions, you can raise your hands or drop your questions in the chat box.
We have none.
So there is one more question in chat box from Mr.
So
Dinesh.
supply package units to be tied into. Yeah, आपको supplier मालूम पड़ता है, ये package unit का supplier मालूम पड़ रहा है कोई. Dinesh, do you supply package units?
आप सही. अरे
I'm not able to understand this question. If we can allow him to.
Hello. So what is the restriction of not moving to a percentage completion method? I joined a bit late, so I could not understand that, because most of the turnkey EPC contractor actually follows this percentage completion method. So why we are not choosing that?
Absolutely right question. As I mentioned, I'm sorry I didn't get your name.
Hi, my name is Neeraj Hajit.
Neeraj, yes, I'm sorry. There was some crosstalk also, so I lost it. Neeraj, yes, you're right. There is a percentage completion method which we can use, number one. Number two, as you see, we have largely work with secure terms of payment. As we go domestic now in the UAE, we are a local company now. FTS is 100% held by Fabtech, and in Saudi we are also becoming local. We have 100% Fabtech Saudi by Fabtech, and we are acquiring another one. So going forward in some geographies, we could switch to percentage completion method, but we feel it could happen. It could be transitioned. It will not happen one shot. Liberalization ऐसा नहीं होगा. We will see the pros and cons. We have our advisors, our auditors, our mentors, जिसके साथ में discussion चल रहा है. One thought I'll tell you why we have not moved, because payment security LC है. अब LC हो गया percentage completion method में perhaps we'll have to depend on that client to keep paying us on the percentage completion method until we have a solid experience with a particular client. We have repeat experiences of course also, but we don't want to spoil them by giving them the percentage completion method ka flexibility. So that's the only thing. But if that happens, you will see substantial growth in our numbers. All right. But then as we'll see, we'll evaluate the situation in the next 6 months or a year, and we'll decide accordingly. Number one. Number two, one question I'm not able to understand. So you supply package units to be tied into client facilities. ये मुझे नहीं समझ में आया, Dinesh. I'm not able to take it. We are.
Can I come in?
Sorry, who is this? Team
Dinesh,
AKMIL, you got to guide me.
Dinesh, if you could unmute yourself to clarify the question.
Yes, Dinesh.
Muted. Yeah, I have unmuted now. Can you hear me?
Yes, Dinesh. Yes, clear.
Yeah, the simple thing was that I heard you telling that sometimes the civil work is not ready at the client's place. So that means your unit is ready, but it cannot be installed or can be tied in to the
Correct.
facilities of the client. I don't know how the payment works in such cases. But that means your real, you can say, installation, commissioning, handing over, etc., will be governed by client. So even if you have got everything ready, unless it is tested, you will not get the payments.
Correct and not correct. So you heard half of what I said. What I said was there are times when the gentleman is not ready with his civil construction, but we are ready with our material. Sometimes we hold the material for relationship's sake, not that we don't have the payment security. I also mentioned, अगर हम चाहे तो उसको LC हमारे पास है, we have the liberty to ship. We can ship it. All right. But there are certain times we take cognizance of the relationship that we are building with the client because it's a huge pipeline of 15 years every client offers us. So that is what I mentioned. But when we see the LC is getting expired, no, we'll ship it. We have that flexibility. So we operate with a lot of flexibility. We are not governed or we are not dictated or we do not do anything which is a matter of compulsion. No, it's our choice.
Yeah, I understand. You would not like to offend the client. But at the same time, I think if you come to this percentage completion, or you can say the inspection by client that yes, this much of work is over, so this much of payment is to be released. This is what large contractors, most of them like Hyundai or all they follow. And I have seen it working well because it helps them in procurement of material, payment of, you can say, maybe I will say laborers and things like that. Huh? So maybe you can review your working strategy, because if you say that my complete, unless I ship, I don't get any money, but I have got LC to back up, I think you have to review this. Okay.
No, as we said,
Just to step in.
Well taken.
Yeah, please, Karan.
Yeah, so Dinesh and Neeraj, I think you'll both had similar questions where, we can recognize revenue basis milestone. So there are a couple of points which I would like to highlight. Fabtech as a company has transitioned from an equipment supply to a turnkey project, right? Over the years, our contract have been worded in a fashion where, it has been dependent to shipment. However, going forward, now we have completely changed our agreement where we made our payments also linked to milestones. But because all these orders are little long in tenure, the change will be effective, 12 months, 16 months down the line. So recently we picked up an order where, we've charged the client for design, we've charged them for shipment, etc., etc. It is just a transition which will happen over a period of time. And our old contracts have worded where the risk of goods transfer to the end customer on shipment. Therefore, the auditor has made a view that till the time it is not shipped, it is supposed to be parked as inventory, and therefore we are following this process. We've made this, we have realized this, change, and therefore we have made the contract itself, worded in a fashion where we can start recognizing milestone-based revenue. This will happen over a period of time when, this all new orders start coming with new, payment terms and new milestone-driven activities.
Okay, one thing more. In this, the material is being supplied by the client or you are procuring and doing. If you can choose to answer, not to answer, huh? And do you have a good percentage coming in along with the order? Because that is all the financial backup you have. If the material is coming from the client, maybe the method which you are following, one can sustain as long as you get a good percentage in the beginning. I stop there. I don't want to go too much into this because you may not be willing to answer.
So Dineshji, I'll give you very simple, simple questions. Our long gesture is ideally because of designs. We spend around 9 to 12 months in designing the entire, process. Post that, we have to have some commercial backup from the client to move us to the technical phase. So, after the design is approved, we expect either advance to kick in or an LC to kick in. Once client commits payment, that is when we start looking at the technical part of the technical is more like forming a BOQ of that particular design. And then we move on to advance. Yes, we block our working capital block is around 120 days. So we need that 3 to 4 months of blockage in our top line. But that is, again, if you look at our COGS or margin, which is around 60% of block, 60 ka 40%, 3/4 lelo. So that is something which we block, but we collect around 10 to 15% advance or a full LC from our customers against that. I hope we've cleared that.
The advances
As
that
I hope
happens
for the feed and detail engineering, you get paid by the client. Huh?
Sorry?
Because,
yeah. So
because
nothing.
otherwise, you are building in too much of cost and uncertainty into your project.
Dineshji, no. Obviously, there are certain things which we would not be discussing in the forum.
Okay,
One
sure. That's why,
discuss karte
that's why
hain.
I
And
was
what
clear
Karan
with you.
mentioned also was protecting our basic business sense so that
Hmm.
everything is not out in the open. But everything happens once we have a confirmation from the client, number one. Number two, there is a good advance, a staggered advance of 15% and 15%, or a lump sum advance of 25% or 30%, based on which design happens. At times, in good faith, when we get the LOI, we start a design. Okay, in-house hai. So there are various pros and there are various means on how we address various issues. But coming to the conclusion is, yes, percentage completion method we are looking at. We could go into it, and we are debating, we're deliberating. Your suggestions well taken.
Thank you very much. You answered more than what I expected.
Thank you so much, Dineshji.
Next question is from Mr. Girish.
Jignesh, since we are a project company, will our operating cash flow remain negative in the coming years? Not necessarily, because it only in 24 cash flow is positive to the other. It LC based hai. This is one of the things. I don't think so. We will always remain cash flow negative, but growth hai, working cap. Honestly speaking, we are very comfortable. And yes, Karan, you were nodding something.
Yes. So Jignesh, basically, if we are growing at 30% and we're making a PAT of 10-12%, we will be in a way negative cash flow, right? For 30%, where my working capital cycle is 4 months. So till the time we are in a high growth phase, our operating cash flow will be negative. Unless until we, look at a very substantial high PAT margin, that is something which is unrealistic, which can be possible for few projects, but cannot be sustainable for all the projects.
Or if we use that flexibility of 8.5 crores ka jo expend hai marketing ka, so it's a matter of we controlling some flexibility and deciding if we really have to spend 8.5, 9 crores on that marketing spend, or we can trim it down, because now we are largely well seeped in the markets that we are present in.
Mr. Girish, you have a question. You've raised your hand.
Yeah, a couple of small questions. In your results, you have put other income at 7 crores. Like, what should we read that as? Because it's almost like 10% of the total revenue. So what should we read as the other income as moving forward as well?
Girish, the other income primarily is on account of interest earned on our FDs. So FD is one, which we've parked as a margin money for our BGs. And secondly, the FDs parked for the IPO money, which we've raised the funds.
Okay, fine. The second was our ticket size is going to go up above 5 million as suggested. That will also help our margins, profit margin, profit margins.
Yes, naturally it would, because it will give us volumes and a very important thing that I mentioned in the beginning. We are leveraging now UAE, we are leveraging Saudi, we are leveraging our presence here to address the Eco-African region, and we are tapping various supply chain in different geographies. So you would, yes, see those benefits coming in.
Okay, fine. I think that's all from my side for this quarter. Thank you very much. Good day.
Thank you lots. Team AKMIL? Okay.
Yes, sir.
Vignesh has asked, going back to historical financials, can you explain the fall in revenues in FY23?
Well, we are looking future. I don't know what happened in 23, to be honest with you, but you remember?
No,
We had done 200 crores of top line in 23.
Yeah, so no. 3 साल कहाँ ले जा रहे हो पीछे जिग्नेश यार?
Jignesh है, हाँ.
Okay, do we have any more questions, investors?
So can I have a parting comment?
Yes, sir.
So thank you very much, everyone. Thanks a lot for being here, giving us an opportunity to explain what we do, to explain our business, and reiterating whatever has happened in this earnings call, and you will hear more of us, more from us. Now, when we speak about medicinal sovereignty, many assume that I assume that many assume that this is limited to generic facilities, because we ourselves, as I mentioned, we were thinking medicinal independence in Middle East, Persian Gulf, Africa, MENA, GCC would first give rise to generic facilities. But in reality, the pipeline ahead is much broader and deeper. In the GCC, in Africa, we are of course doing generics, we're doing IV solutions, we're doing onco. We are the first one to do the first onco facility in in Saudi, the first biosimilar in Algeria, the first vaccine project, COVID vaccine project in Egypt is ours. There are many firsts to our credit, and I think we should do justice to our investors in sharing all these information with the investors. Now in GCC, we are in advanced stages of finalizing compounding pharmacy platforms and cell and gene therapy facilities. In fact, one of our reference project done through our subsidiary here for cell and gene facility will be commissioned shortly. These are high value precision driven segments that reflects where healthcare infrastructure is heading. In Africa, we have recently finalized the animal health projects, opening an entirely new vertical for us. Veterinary and animal health manufacturing is a structurally growing space, and it strengthens our presence across emerging markets. Our execution capability remains a core differentiator. I read somewhere, some website expressing some concern over our execution capability. कि order position है, execution नहीं हो पा रहा है क्या? So, in fact, our execution capability and our ground presence of our team in Kenya, in Nigeria, Algeria, Egypt, Saudi, UAE is a key differentiator of our execution capability. We design in-house across dosage formats, sterile injectables, oncology, OSD, high containment, advanced therapies, and this integrated depth allows us to control quality, timelines, execution with precision. I would really invite a lot of you investors to come in and see the kind of facilities that we have done. And that is without the promoters getting involved. Auto mode. And as Dhruv, I'm glad Dhruv is here, and as various investors were here, they were very pleasantly surprised by the quantum of jobs or the magnitude of the jobs that we are doing. So execution capability is not a challenge, it's a core differentiator, in fact. Our projects speak for themselves. I mentioned that the size, the integration, and technical intensity of the facilities that we are building today reflects our capability. We are also initiating certain strategic steps, which over time will significantly, as I mentioned already, will significantly deepen our order funnel. We're owning processes. We're owning oral solid manufacturing, injectable process manufacturing, water and process. We're bidding now for turnkey start to finish projects, including the external infrastructure. And these all will deepen our order funnel and enhance or speeden up the process of delivery. If stakeholders wish to understand the scale of what we are executing, they are welcome to visit our UAE operations or to Saudi or to Africa. Or if you really have Nigeria for that matter, Algeria, the door is open. The size and sophistication of the projects underway provide clear evidence of our trajectory. We remain confident in our execution strength and a really long opportunity ahead, an unprecedented opportunity ahead. We thank you very much for being here with us, and we'll be back soon.
Thank you. I
Thank
would
you
like
so
to
much.
thank the management team for providing valuable insights and the guidance. And thank you to all the participants for joining the conference call. We truly appreciate your time and continued interest in the company. For any further queries or clarifications, please feel free to reach out to us at info@akmiladvisors.com. Thank you, everyone. Have a good day.
Thank you so much.
Thank you.
Yes.